Galileo Russell, friend of the show. He's also the founder at HyperChange TV. Hello, Galileo. You must be getting really excited today because Tesla moved up its earnings reports, only giving us 2 days notice and giving us only a week, really, or giving us a week ahead of time what they were going to do. What are you expecting?
First of all, happy Tesla earnings day. I mean, I know we already have the delivery numbers, so we know that Tesla's been able to deliver twice as many cars as the same quarter or just the quarter before. So I'm looking for a little bit over $7 billion in revenue, which is a lot more than the street. And then obviously all eyes are on profitability. I'm actually personally not too concerned whether they actually show like a real profit or not, but I really need to see a huge improvement in the bottom line. And that's what they've been guiding for. That's what we've all been expecting. So, you know, huge revenue growth, well over 100% revenue growth, and ideally a massive improvement in the operating income.
I mean, we are expecting, again, something huge. It's not uncommon for companies to shift earnings up, but that's only if it's up a day or two. The fact that they have shifted it up over a week, it tells you that they are getting ready for something big. If you will recall back to the end of the quarter, Elon Musk and his brother Kimball Musk was trying to rally the troops around the deliveries, getting their own employees and other customers to come into Tesla's showrooms to help onboard new customers to get to that quarter and delivery number. Profitability, though, that's something that has been promised since at least August.
The numbers are in. The numbers
are in, so we'll digest them.
Okay, Tesla's calling this Q3 of 2018 was a truly historic quarter for Tesla. Galileo, go ahead.
Yes, let's go. GAAP net income of $312 million, non-GAAP net income of $516 million, operating income of $400 million. I mean, these are way better than any numbers I was expecting. Cash flow of $1.4 billion. Cash is up $800 million quarter over quarter. I mean, they hit a Model 3 GAAP gross margin of 20%. It looks like they hit every single number. I mean, this is the turning point that we've all been waiting for. You know, like financials are a lagging indicator of a company's success. I mean, all the bulls and people following the company have known they've been doubling deliveries. We're seeing Model 3s everywhere on the road. They always get more profitable as they improve the production ramp. And this is validating all of Tesla's guidance. It's validating the bull thesis. I mean, the biggest pillar of the shorts is they can't make money. They rely on the capital markets. All those concerns immediately just got alleviated. Okay,
so additionally, Galileo, of course, we were looking at what they would have to produce for the Model 3s in order to be turning this profit. They couldn't be focusing on the $35,000. Arguably, they couldn't even be focused on the $42,000 version. Does this mean that they are going to have pricing power, perceivably, going forward in what was supposed to be a mass market vehicle?
Totally. I mean, originally when the Model 3 was rumored, we were thinking an average selling price when things stabilized around $42,000. I've totally had to readjust that to around $50,000, $52,000, even when they introduced the $35,000 car. So at the end of the day, I think Tesla is going to be able to sell 500,000 Model 3s. The only way my estimates have changed in the past 6 months is that instead of doing it at 42,000, I think they're going to do it closer to 52,000. And that's going to have a that means really good things for gross margins. I mean, I think we saw a way better than expected uptake rate on the performance Model 3. I think people love their Teslas. This is a product that they want to move up for. They want to get a much better car than they've ever gotten in their life because they really care about the product. And we're seeing that in the financials.
Okay.
And that's why.
Galileo, one outstanding issue here, capital raise for the rest of 2018. Is Tesla going to have to raise money?
I mean, I don't know if they've said that in the report, but I mean, cash balance is up to $3 billion. They still have that $1 billion convertible note, but looks like they should be able to pay that off easily. As they said, I mean, I just think this is, as a Tesla, you know, I'm reacting live right now, but as a Tesla bull, like, this is the quarter we've all been waiting for. This is proving that Tesla can make money. They're on the way to being the most profitable automaker in the entire world. This is justifying the company's valuation. Like, I think this is all good news.
Okay, Jeff, weigh in.
Well, Galileo, I'm kind of curious, how sustainable do you think this is? You know, one of my biggest fears going into this quarter was, you know, they were going to use that the tax credits that they haven't used all year, and I haven't seen obviously the numbers. But last year they used $360 million to help the bottom line. This year they only used $70 million going into this quarter. My question to you, and especially with competition, right? If you think about what's going to happen from 2018 to 2022 with Mercedes, Volkswagen, Porsche, and Volvo, and who knows, other Audi, but coming out with all these electric cars, how are they going to be able to sustain this kind of growth?
Yeah, okay, so first on the tax credits, I mean, I don't think yes, Tesla was able to generate some excess revenue from that, but like you said, $300 million all of last year. They just produced $800 million in cash flow. 400 something million in profits in a quarter. Like, this is not what's driving the improvements in the business. It's just simply that they're growing and becoming more profitable. Like, it's nothing to do with the credits that's driving these underlying fundamentals. In terms of competition, I've been hearing this for years and years and years. First, it was the Chevy Bolt. That's a 200-mile range EV. Model 3 is outselling that 13 or 14 to 1, even though it's on the market and available. I mean, all these companies like Jaguar, Mercedes, e-tron, Audi, they're all saying and making a huge splash that they're committing to electric vehicles. But the bottom line is their business is disrupted. They've had to pivot, and they're just trying to chase and catch up with Tesla. They're at least 3 years behind in battery technology. They haven't built out the same store infrastructure. They haven't built out the supercharger network. Like, they're just the dinosaurs trying to adapt. This is validating Tesla's disruption, that they're all trying to copy them. And I just, like, if you look at the production for those cars, the I-Pace, the Taycan, they're like planning production of 10 to 20,000 units per year by like 2020. Tesla's on track to build 500,000 pure electric cars by 2020. Until these electric vehicle makers start really committing, or other car makers start really committing to building millions of EVs per year, as Tesla's setting up to do, they're just not going to be a threat, and they're hesitant to make that commitment because they're not making a gross profit on their electric vehicles, and that's why we're seeing them drag their feet, and they're making a huge show in the press. But the reality is they're still hesitant to commit to EVs.
Yeah, Galileo, one portion that Elon Musk and his executive team lead with in this, what they call a historic quarter, they talk about U.S. passenger car sales in the third quarter of the year, saying that in terms of actual volume of cars sold, Tesla Model 3 comes in at number 5 in the entire U.S. In terms of actual revenue, it was the best-selling car, made the most revenue out of any single vehicle that was sold in the U.S. for the quarter. How does Tesla get to number 1 in terms of volume?
Tesla, I think, is going to be a luxury car maker. Like, they may dominate. I mean, now they're dominating much more than 10 to 20%.
I just want to say they're selling more Model 3s than Nissan Sentra, than Hyundai Elantra, than Nissan Altimas in the last quarter.
I mean, this is the iPhone moment. I mean, that's the data that proves it. It's twice as expensive, 3 times as expensive as those cars, but more people are buying it. It's because consumers realize we need to get off fossil fuels. We need to go electric. Tesla is a smartphone on wheels. It's just an incredibly fun car to drive. It's a product that brings you joy. Like, I just think if you drive one compared to those other vehicles, you'll realize why this is such a disruption. And this is the iPhone moment. I mean, nobody thought this was.
Galileo, what did analysts get so wrong about this quarter? Because the estimate from Reuters was a loss of 19 cents a share, and this was an absolute huge beat in terms of EPS, coming in at $2.90 a share. What did analysts get so wrong?
I think the biggest thing that analysts get wrong is what the shorts get wrong as well, which is just the stagnation fallacy. They believe that Tesla cannot continue to improve its manufacturing process. If there's one thing that Tesla has shown, it's that their pace of innovation, and they're constantly improving. So they said they were going to hit 20% gross margins and improve. Nobody thought they were going to be able to hit those gross margin targets. Everyone was freaking out that they over-automated and then had to hire people instead. Well, the whole time Tesla was saying it's fine, we're still going to hit these targets. So there was just this huge overbearing cloud of skepticism over Tesla. Nobody believed what the company said, partially because they missed those earlier Model 3 targets, and partially just because people don't appreciate how fast this company is innovating and improving and figuring out how to build cars profitably. And they said they were going to do it, and they did it, and they figured it out.
Market cap for Tesla already and still exceeding that of Ford's and GM's. Ford is also reporting today after the bell. We'll get a check on that in a little bit. GM next week. I want to talk about customer deposits because that shows us how much they've worked through their backlog. And according to the earnings here, they say that they have continued to work through, and they're now down to 906 million here. They're also improving their margins based on the production as well. One of the big shorts, Andrew Lev, changing his opinion too on Tesla. Want to get your take on why you think he chose this moment to do so.
I mean, I feel like he was watching a lot of HyperChange, because I read his report. And it was almost the team
there it is.
For 6 months. I mean, or for years. I mean, to me, this was staring at everybody in the face. I mean, Tesla said they were going to be profitable. We already knew they doubled their deliveries quarter over quarter. So the numbers, I mean, how profitable they are is a surprise, but we all knew they were going to grow this much. We all knew they were selling a much higher price version of the Model 3 than they had originally anticipated. So I just think you added those up, and finally one bear, was able to put his ego aside and realize that, like, this company is disruptive. This is the iPhone moment. They have more revenue than any other car in the industry. Like, if that's not disruption, then what is? And it's a growth story, and investors are going to continue to give it leeway as they continue to put up these sales numbers. And I just think the bull story is continuing, and in fact, just getting started.
Refundable deposits, 942 million as of the end of June, and now down to about 900.
Look, I agree with you, Galileo. This is like taking a test where you already knew the answers. We already knew where the deliveries were going to come in at the end of the day. And so now it was all about what they were delivering. And so they did deliver. You're seeing that. We're reporting that. But the big thing that is still a question mark, Elon Musk here. What tone do you think we get from him on the earnings call? This is going to be a new Elon than we've seen before. This is first time beat Elon, if you will.
Yeah, I think he's kind of like, he was being really erratic before this, or not erratic, but just unpredictable. And I think he was kind of just like messing with people because he knew this quarter. I mean, I think this conference call is going to be like a party for everyone that was long, for the whole Tesla community. Like, this is a real feel-good moment for everybody involved, and I think that's going to be the vibe on the call.
I don't think that they should be partying too hard. I mean, they just settled with the SEC. He had to apologize. He already
got to get his tweet censored.
He already went after the SEC in a tweet, kind of right after that settlement. Galileo, I would say you should not encourage Mr. Musk here to be too celebratory.
But they've got a new Tesla kilo.
Yeah, but I think Galileo, I feel like we should temper
Galileo, I think you would have to agree if Elon Musk can sit back and just bask in the glory of what he has accomplished, and this was one of my biggest things, and I think, Galileo, you could agree with this, is that people get so negative on stuff that they start to see things that aren't really there, right? Like Galileo brought up a great point, was that they were showing us that these revenues, they were going to beat on revenues, right? They were selling enough cars, but there was so much negativity towards Elon Musk, they weren't really looking at what the company was actually doing. And it's actually, it's a really good learning lesson for investors to take away the egos, to take away the personalities, and actually see what a company's actually doing. Are they growing their margins? Are they making sales? Are they growing revenues? That's what you want to see from companies.
I mean, you're singing Galileo's tune. He's been trying to talk about this for, months and years.
To me, I'm just skeptical, with the valuation that you are seeing on Tesla right now, from an investor standpoint, yeah, speculation, absolutely. You want to speculate, use some options, try to get some more, 10 or 20% up move, or maybe on a pullback. But from a long-term investment at these levels, it makes it really difficult to make that investment.
Yeah, absolutely.
Can I chime in?
Yeah.
Okay, so Tesla just reported operating cash flow of $1.4 billion. Let's annualize that and say it never grows. $4.8 billion for a $50 billion company. We're trading at a 10% cash flow yield. And this is a company that's going to keep growing, that's going to get more profitable. I mean, this is a bargain basement valuation. That's why I think the stock's going to take off. And what's so exciting about this is now investors are going to start assigning value to the net present value of cash flows of the Model Y, of the Semi, of the International Model 3, because Tesla's proven they can execute, and they've proven that now that they're profitable, they can start funding these new exciting growth initiatives like the solar roof, like the battery business as well. And we're just going to, I think the market's now going to turn its attention to, we can't build the Model 3, they can't do it, to wow, look at every other product in their pipeline, look how they just executed.
Yeah, to that point, Galileo, labor hours per Model 3. This is a notable tidbit from the earnings report. Decreased by more than 30% from the second quarter to the third quarter. What's your expectation in terms of how it's going to continue to fall as they do figure out efficiencies here?
I mean, I just think everything keeps getting better. I mean, Tesla's also a sort of automotive, like it's a very big capital intensive business. So I think it's always going to be some lumpiness quarter to quarter. But I think the trajectory here with Tesla is like, this is a real turning point, and everything just sort of keeps getting better from here as they keep getting better at manufacturing, as their orders and sales continue to grow.
So let's talk about manufacturing a little bit more, because this is a company that does have expansion plans, especially into China. How does that make things trickier going forward? And I'm not going to ask you if you think the stock is going up, Galileo, because if my memory serves me correctly, you got and gobbled up a bunch of shares at around $330-ish. Is that right?
I bought at $250. I bought at $278. I bought at $334. My average holding right now is at $216.
$216. Okay, so you think it's going up? No question about that. But China, how much of a weight is that on the company as they're trying to expand and replicate this production that Tim was just walking through in a different region?
Yeah, so China, I mean, I think the business is really exciting just based on like removing China from the entire equation. But now we have this really interesting era in China where there's huge tariffs. So Tesla's committed to building a factory there. From my understanding, they're one of the first automakers to ever be able to build a fully owned subsidiary factory in China. So it's going to take, and I think they just started construction there. So it's going to take them some years to figure that out and ramp it up. But I think eventually they will figure out China. It's the world's biggest electric vehicle market. Tesla will be a luxury brand there. It represents a huge opportunity over the long term. But with this new tariff situation, they're going to just have to build out their own factory before I think they really make a push there. So it'll be another couple years. They'll partner with a local bank to help fund some of the capital. And they'll use some of this new cash flow to fund the capital as well. And it'll be a next generation factory, taking everything they've learned from Fremont to make it, be able to produce the Model Y, Model 3 more profitably than they are now. So a lot to get excited about with China in the long term.
In terms of profitable quarters, this isn't Tesla's first profitable quarter. The company's never had a profitable year. It had two other profitable quarters. One was in the third quarter of 2016. That was $22 million in profit that they saw in the first quarter of 2013. There was $11 million in profit. Galileo, is this a new Tesla? Are we going to see profitable quarters regularly now?
I believe so, and they've guided so. I kind of want Tesla to just run at break even and keep going and growing as fast as possible for the next couple years. But I think this is an inflection point in that they can use their operating cash flow to fund CapEx, and they're no longer reliant on the capital markets. And this is that's the real change, is that the financial engineering strategy has gone from external capital to grow to internal capital to grow. And that significantly de-risks the whole story. That makes every single short thesis basically crumble, because their entire thing is like, well, Tesla needs to keep raising money. What happens if recession? Well, now they don't. And so I think that's why this is so important and so big.